if a guy like Robert Kiyosaki is leveraging this strategy with everything else that he's doing, it's not by accident. Like people, if you're going to try to accomplish significant things, you need to do things intentionally. And one of the things that I love about this system is that it forces you to operate inside of a financial system that helps you make decisions differently. It forces you to live more intentionally and make more intentional decisions around your money. Hey, what's going on, cash flow hackers? It is Chris with Life 180, and I'm really excited to get into this video with you. So for everybody who's been subscribed to this channel, I put out a video about 5.5 years ago talking about how much Robert Kiyosaki loved whole life insurance. Now, in watching that video, if you've seen it, or if you've looked through the comments in that video, you know a lot of people have asked me, where did I get that information from? Now, the reality is, I have known that Robert Kiyosaki has loved life insurance, whole life insurance, when used properly, designed properly, so on and so forth, for a long time, because I actually know who his agent is. I'm not going to get into the details of that because of confidentiality and all these different things, but I did know that, right? The challenge was, until I got an email from Robert Kiyosaki talking about how amazing whole life insurance was, I literally couldn't talk about it, right? Like it's one of these things that, is frustrating in the industry when you know somebody is out there at Robert Kiyosaki's level who's leveraging this strategy, utilizing it, and gets behind it and backs it, and wants to kind of coach people through it, I guess, a little bit. Yet he is not focused on it, and it's not very public, and the only way you get access to it is by being in one of his kind of inner circle things, right? And so that's what happened in I'm going to say 2015, maybe 2016, but in that range, when I got an email from him, and a lot of people were saying, Chris, how do you know this? How do you prove it? I don't believe you, blah, 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 blah. Now, what happened was, I'm just going through my Google Drive where I have just literally, I have like the biggest Google Drive account you can have. I've got just folder after folder, file after file, and I'm going through there looking for something else completely like unrelated, and I stumbled across this image that my wife, who was running all my marketing back at the time when I first launched Life 180, for the first period of time when we launched, and as I was looking through it, I found an image. She, God bless her, took a screenshot of the email that Robert Kiyosaki sent, and what she did was she put a banner on the top of it, basically putting Robert with me, and it's old imagery, and it's pretty funny to look at the graphics and stuff like that now that she took along with the screenshot. But that's not the point. The point is, I've got a screenshot of this email, so what I want to do is I want to go through this email with you because it's really cool, and I'm going to go through, I'm going to read it, and I'm gonna give my opinion and my insight on it, and talk about why I was so excited, because how he wrote it was really succinct, and the way he positioned whole life insurance is completely in alignment with the way that we talk about it. So really exciting. Let's get into this. So I'm really excited to get into this, guys. So check this out. So it says, and I'm just gonna do this for fun. I'm gonna show you what my wife did on the graphics side here. Look at this. So this is pretty funny. Look at me. I have dark hair at the time. This is so funny. I had no gray hair when this all came out. It's funny. I just gave that shirt to Goodwill too. Ha, that's funny. So all this came out, and she put this together. So what I'm going to do is I'm going to read through this, and you can see, greetings, Chris. There are two money problems that exist. One, either you don't have it, or two, you don't know what to do with the money that you have. Unless you were born prior to 1781, let's face it, none of us will, banks have been the primary institution to hold your money. The primary institution to hold your money. But what if there was a way you could replicate the banking model all on your own? Most people buy life insurance to protect their families from the loss of income if they were to die. However, certain types of life insurance offer more benefits to the policyholder than just a death benefit. Here are the 4 ways whole life policies can be beneficial. So this is what I talked about in the previous video. I'm gonna read this, and then I'm also gonna interject my own commentary and opinion. Life insurance policies build cash value. Cash value is, unlike the death benefit, is one you can use while you're alive to borrow against or to reduce premiums down the road. The cash value of a whole life policy accumulates at a tax advantage basis, which means the money you would draw is not taxed until the amount you would draw exceeds your basis, the amount you've already paid into the policy. So what I want to say here is he talks about the money that you would draw is not taxed. Like the first and foremost, that is true. You can withdraw money up to basis. But what I would also say is you're never going to want to withdraw money typically from the policies. There are a lot of different things that you can do. In fact, since 2016, banks have gotten really good. I mean, it existed back then, but it's more prevalent now, where banks are actually offering lines of credit that you can attach to your cash value of a whole life policy. They will not do this for index universal life policies, only whole life, because they know that IULs have too much risk associated with it. And so it's just something to take into consideration. Like that, it's another, to me, validation. If a bank is willing to give a cash value line of credit affiliated and associated with the value that you have in your whole life policy, but they're not willing to do that in an IUL, that tells me a lot about the risk inside of an IUL. If a bank, if you think you're smarter than the bank, you got another thing coming. So the other thing is, from this context, I would never withdraw, because when you withdraw, you interrupt compounding. When you borrow against it and you leverage it and you collateralize your policy to access, you can always get tax-free access to your money. And ultimately, as it grows and over time, you're gonna ultimately have less tax consequences or liability as you go down through that. So as you go through that process, it replicates your savings account. This is a huge one. I always tell people, if you believe that you need to have safe money, then and like an emergency fund, a savings account, an opportunity fund, most people don't know where to put that money. They think putting it in a bank account is the only option, and so therefore they put the money in that account, and they ultimately are losing money to inflation if they don't use it, and they kind of look at that as a cost that goes along with just having access to that capital, right? And so here's the reality. He says it replaces your savings account. For the reason above, you can build up a nest egg for retirement. He uses retirement. I wouldn't say this should be a primary resource for retirement. It can be a great volatility buffer, meaning if you have retirement income streams in other places and the market crashes in a year, which is going to happen, you can leverage the money that you have saved inside of a whole life policy to be the account that you access and gain capital from and gain income from during the year of hardship or during the year of market correction. That way you're never liquidating negatively performing assets. It's a fantastic strategy. Most advisors say policyholders should allow their policy to grow before tapping into the cash value for retirement. Most advisors say that, yes, and that is the case depending on how you structure it. For real estate investors, for entrepreneurs, a lot of times when you look at the capital, I mean, especially if you have lump sums of money in savings accounts right now, and you're able to contribute any amount, we can figure out a ratio where you can put the money in and you maintain about, let's say, 88 to 90% of liquidity of the money that you put in year one, right? So, and you pick up all sorts of other ancillary benefits. It's pretty cool. All right, lower interest rate than a bank. Life insurance companies often offer cash value loans. Not often, in a mutually held life insurance contract, they always offer cash value loans at interest rates lower than traditional banks. Oh, I guess that's what he's saying. Often it's lower than traditional banks. Depending on what the loan is going to be used for, he's right, it's often used. Interest is often available at lower rates than what a bank would offer you at. So for a personal loan, for instance, where it's an unsecured loan from the bank, the interest rates are most of the time going to be much, much better utilizing your whole life policy loan provision to be able to access that, right? Of course, you're not obligated to pay back the loan since you're essentially borrowing your own money. I'm very careful to not use that lingo. You are not borrowing your own money. You're borrowing against your own money. You're collateralizing your money. So if you don't pay back, the life insurance company knows that they're going to take the money out of your policy, and they know they're guaranteed that loan to get paid back. It's a collateralization of the policy. However, it is important to note that any money you borrow plus interest will be deducted from the death benefit when you die, right? So that's important. So annual dividends. Another tax advantage of this type of policy is the payment of dividends by many insurers. Dividends are generally taxed as gains. In the case of life insurance, however, the IRS treats dividends as a return of premium and they are not taxable. This is the kind of thing Dave Ramsey rants against this. Robert Kiyosaki sees the leverage behind that and he gets behind it, because if you can get dividends paid, the way that the dividends come through and the way that they're credited to you is tax advantaged versus more of a, creating more of a tax consequence or liability for you, right? While dividends are not guaranteed, some companies have paid them every single year for 160 years. That is true. It's kind of crazy when you break it down. It's actually up to about 170 years now for some of these companies, and it's really insane. People talk about the fact that life insurance companies have been doing this since 1848. When I first started thinking about that, I don't know, but you think back, that was before Abraham Lincoln was assassinated. That was before the Civil War, right? So life insurance companies have been around, mutually held life insurance companies have been around, being financially stable and secure and helping people through all economies, all markets. A lot of people are worried right now about the devaluation of the dollar. What's going to happen? Well, the bottom line is, before 1913, we were on a different financial standard. Literally, there have been, I think, 2 or 3 different types of money that have been in this the United States economic system since life insurance companies have been around and doing this. So as it's ebbed and flowed, we had pre-1913, after 1913, when the Federal Reserve came into play, the gold standard obviously eliminated in 1971, and we went off the gold. Gold was no longer affiliated with the value of the dollar, right? And that comes into play. But these companies have never missed a dividend payment through all that, through the Civil War, through World War I, through the Great Depression, through Korea, through the inflation in the 70s and 80s and the crash in 1980 and the dot-com bubble and the Great Recession. Like, they've never missed a dividend. So think about that. In 160 years, if that's not the most financially stable banking idea system, I don't know what is. Like I always tell people, life insurance is not meant to be an investment. It's meant to be a savings alternative. It's a bank account on steroids. And when you look at this and you leverage it and you set it up properly, it is the most powerful foundational asset that you will ever have in your life. You can use your dividends in a variety of ways. You can take them in cash, leave them to accumulate interest, or use them to increase your policy's face amount or death benefit. We use a lot of times dividends to buy more paid up additions. When you do that, it increases cash value, actually gets you more death benefit, gets you more cash value. It's a fantastic thing. Although whole life insurance is not considered to be an investment, there are certainly more benefits in using traditional bank methods and can become a part of your assets plan. This is what makes Rich Dad different. Sincerely, the Rich Dad Company. So that is what I have. So I know there were a lot of people that were hating on me for years, thinking I was just making this up, and it was really frustrating me for a while because I couldn't find it. I searched my email high and low, I did keyword searches, all that stuff, I couldn't find it, and then finally, because of my wonderful wife, she had made that graphic, and I found it deep in the archives of my Google Drive, and so I'm excited to share that with you, and I hope everybody really understands the power of this. Listen, if a guy like Robert Kiyosaki is leveraging this strategy with everything else that he's doing, it's not by accident. Like people, if you're going to try to accomplish significant things, you need to do things intentionally. And one of the things that I love about this system is that it forces you to operate inside of a financial system that helps you make decisions differently. It forces you to live more intentionally and make more intentional decisions around your money. And so that's one of the most powerful things. So if you have any questions at all, leave them in the comment section below. Make sure, if you haven't already, click subscribe, hit that bell. That way you get notified every single time I launch a new video. We got a lot of really great stuff coming out. We're doing a lot of really cool things. Got the book coming out, got the challenge coming out. So keep on the lookout for all that. Thanks, Cashflow Hackers, for being here. Look forward to seeing you on the next video. Until then, have a blessed, inspirational day, and we'll talk soon. See ya.